Our next guest also believes in the stagflation scenario. Let's bring in Peter Boockvar of the Bleakley Advisory Group, and he's also a CNBC contributor. Peter, great to have you with us. What could the Fed do at this point?
So I think that Friday will be a non-event, and they'll absorb the information over the next month. Kids going back to school. To what extent parents who are caregivers go back to work? What happens with the labor market after the unemployment benefits expire after Labor Day? Where does the Delta variant go with 1 million people now every day getting vaccinated and a lot of the numbers rolling over? But to what extent do kids get affected? So I think they're going to take this. That said, monetary policy is positioned where it was a year ago before we even knew there was a vaccine. We have mega emergency policy that has resulted in this stagflationary environment that I do think, regardless of Delta, they need to start pivoting and they need to start to slowly roll back these asset purchases because it really is monetary overload. And I like to talk about the two most interest rate sensitive parts of the economy, housing and autos. There's no issue with the demand side. The problem is as prices have gotten so high, shortages obviously all surrounded by that. And what good is QE going to do? If someone wants to change their behavior because they're worried about Delta, QE is not going to offset that.
So, Peter, if you're right about stagflation, BK believes this as well. That's something they being the federal, they can't combat that. And they will try, but they can't win. So, to your point, be careful what you wish for. You might get the inflation part in inflation, but you're not going to get the growth that needs to be there to be commensurate with that. How does that sort itself out, in your opinion?
Well, a stagflationary environment, which it's not a question of if we're going into one. We are in one right now. It's just a question of the extent of how long it lasts and how far it spreads. And no central banker right now in this modern day age of monetary activism has had to deal with this. For decades, they've had low inflation that has given them license to do whatever they wanted to do. So if stagflation takes hold, it will be handcuffs on the Fed. And what do they focus on? Will they focus on the stag part by keeping policy excessively easy still? Or do they focus on the inflation part, but with the consequences that brings as well? So there's no easy choice here whatsoever. And the bottom line is does Jay Powell want to be Arthur Burns or does he want to be Paul Volcker?
Peter, so if you get to any point here in the next week or month or even year that the Fed has to pull back any liquidity, I think the markets have a disaster. Does the Fed, who's overly concerned, you've made this point very clear, very concerned about asset bubbles, do anything to combat that dynamic? There's very little they can do, but I believe, especially last week as we digested Fed minutes and it became almost a given that they're going to taper, that people felt that the taper was okay because the balance sheet was still growing. And I just don't agree with that. I think markets are going to be devastated.
Well, if you look at the history of QE and when it was on, when it was off, every major correction in the stock market outside of COVID and the Chinese yuan devaluation in August 2015 was associated around ending QE, tapering QE, or raising interest rates. So the analogy I like to give is that, yeah, when tapering takes place, air is still going into that balloon, but it's less air going into the balloon, which means the balloon contracts. So yes, there will be a correction associated with tapering, just as there always has been.
Peter, thanks so much for your thoughts. We appreciate it.
Thank you.
Peter Boockvar of the Bleakley Advisory Group. Brian Kelly, it sounds like the Fed's in a pickle. Damned if you do, damned if you don't.
Yeah, they are, frankly. I mean, and let's talk about the other side. If they do create a correction because of tapering, then they're going to have to walk back that tapering because we have debt levels at all-time highs, and that implies that collateral levels have to be at all-time highs. So you can't have the collateral come down if you have this debt. So they have to come back. It's a terrible place for them to be. So, but the real question is, we argue about that all day. How do you invest in this environment? For me, right now, it seems as though equities are one place to be for the relatively short term. And we'll go back to Bitcoin. I would much rather have Bitcoin than bonds. So I buy Bitcoin and at some point, not today, be short bonds.
Yeah. Tim?
Well, I think you have a case where there is some room before the Fed has to do what they have to do. Leaving that aside, that July Fed minutes discussion came before a very strong payroll number that we got after that number and some very strong inflation numbers. But look, as we have seen, industrials get oversold and they rally back. I don't like the charts here, but I think the underperformance of the industrials and the transports in the short run is something that needs to be rectified. I think this energy trade is also something. I mean, part of what we're talking about in the inflation side of this trade is that assets go higher. Even if growth goes sideways to lower or not as high to commensurate with inflation. So I still like those trades. I think emerging markets are places where, although the China headlines are terrible, the other parts of EM are actually in a very strong fiscal position to combat slower growth in the U.S. and a Fed that actually might be on the move.
Yeah, I'll just go back to the one trade that has gone back and forth as rates have gone up and gone down and everything, and that is the QQQ, the NASDAQ 100. We know that those top 5-6 names make up about half of it. I think everybody wants to buy those. I want to buy those. I actually want to sell my puts at some point really soon, and then I want to buy them again. But we just need a reason to reload. I'm just saying it doesn't make a whole heck of a lot of sense to be buying highs when we know what the headwinds are and we know what the lack of clarity is right now.